Yeah, record. I think we started recording now. Can you guys see recording on the screen? Because I can't see it, but you guys will be able to see. Okay.
Yeah, I see it.
Okay. Now I'll start from the. So personally, I just have 12 months on the screen just to give me an idea. 12 months. So here, what it does basically, it shows each candle is a yearly candle, and it helps me with direction. This is something I do. This is 12 months, but you can see that we're coming from a yearly demand zone. So we know that we are pushing upwards. However, I can still see as well that we have this here too on the yearly. So if for swing trading, it helps you know your ultimate like target. Do you get like your ultimate levels? So that's 12 months, is 6 months. You can see clearly here that there's a lot of they haven't taught us imbalance yet, but on the 6 months you can see that there is this imbalance here, and you see that even on the 6 months we are still reaching for, we are coming from demand as well, so we know we're pushing upwards. But then I also see imbalance here on the 6 months. So this is what I do personally. You guys you don't have to do this, but I just start from higher, since higher time frame rules, I start from 6 months, 3 months, and then I go to the monthly. Okay, so now this is 3 months. We still see that tiny gap here, the value gap. And we know that we now have this high that can be a possible target because we're pushing up on the 3 month candle. And we can still see clearly on the 3 months that we're coming from demand. So we just know that market is trending upwards, but that could just be to fill this demand supply and then continue downwards. But it just gives me an idea. So now we go to the monthly time frame. We have this gap here that is unfilled. This can actually pass for liquidity, this hidden double bottom, to be honest. So this already looking like a probable zone. We have this. So on this time frame, you can see we had a low here, a high. We didn't make a lower low here. We didn't make a higher high. Then we made a lower low here. That's here. Made a lower low here. Sorry, guys. Let me take away this magnet. Okay, so we made a lower low here. But then we now made a higher high. So we broke market structure here. Break of structure. We broke this high. That's why we came back for the mitigation here. And obviously, when structure is broken, we know that next target is to take out this high, this high now to continue. Remember, we still have this our zone up here that could be our ultimate swing trade target for long term, and that's a lot of pips, to be honest. So we know we're reaching for this high, but this is on the monthly. We have our levels. Let's see what's happening on the weekly. So I have 2 weeks time frame here. It looks like we're respecting this level and pushing up. On the 2 weeks, we still have all our zones laid out. Now let's go to the weekly. Now we're starting to see more structure. We're respecting this demand zone, right? But we haven't broken this level yet. So for me, when it comes to market structure, I'll say it's safe to take a confirmation entry. I like to wait to see structure taken out before I confirm bullishness, and I'll explain the reason why. Now, if you go to the daily time frame on Euro USD, we already know that we are trending upwards right now. We know that. However, on the daily, right, we're making. Wait, where's my? Yeah, let me get this. So we're making, from this point, we're making higher highs. So let's say we had a higher low here, higher high, higher low here, higher high. And then we got a break of structure here. That's on the daily. This was a daily break of structure, right? So we made a lower low, right? We went ahead and made a further lower low. Now that range structure we were taught. This is an example of a range structure here. I'll explain why. Remember, he said when market breaks structure and doesn't come immediately to mitigate and keeps going down. So we follow the range structure. And if you notice on this time frame, on the daily, we respected this daily candle range structure, right? And it looked as if we were respecting it here as well before we got the break of structure. So when I do my top-down analysis, I just use the higher time frames to get direction. But the time frame that really shows structure is the 4-hour. So on the daily right now, it looks like we're trending upwards again right now. But nothing is confirmed from me. I won't say we are bullish yet until this high is taken. Because we can notice, there's no reason why we shouldn't sell from this zone, to be honest. There's no reason why. I actually have it as a sell zone. And I'll explain why.
It's a sponsored candle.
It's a sponsored candle, yes. Now, on the 4-hour, it becomes clearer. Everything becomes clearer on the 4-hour because you have structure to work with. Now, on the 4-hour, we mitigated this zone, this candle. It's a very clean one, a very clean candle. Very clean candle. That's the last mitigated candle. And then this has not been mitigated. So for all we know, even though it looks like we are trending upwards right now, we have not broken structure. We only confirm a break of structure. If this high gets taken, then there's a break in market structure to the upside. And then we wait for any retracement down to buy it up. But for now, we might be reaching for this sponsored candle because a sponsored candle, like we were all taught, is a candle that took our liquidity taken out here, right? And broke structure. This is even a major break of structure. This is the first minor break of structure that confirmed the zone. So immediately you broke this structure, price has not returned to that candle. So currently, as it stands, this is a valid sell point of interest for us based on market structure because we're still following the mitigation, right? Mitigated candle, we broke structure, and we're reaching back for a retest. And I'm sure we'll tap the zone and continue falling, right? If we are bearish. So just this how I analyze from higher time frame down to lower time frame. And it's funny how it just market structure, it repeats itself. These things repeat themselves. Like there was a trade that happened before my eyes on so just guys, just watch this level though for Euro USD for sales. But if we break this zone and continue pushing upwards, then we have our bullish break and then we can wait for pullbacks to continue buying Euro USD. So that's it for me for Euro USD. And Extra Man talks about void in a week as well. This is a week that took our liquidity, is obvious. So we must get some form of reaction from that level when price gets to it. So for now, I'm still bearish on Euro USD. Until that high is taken. Then we confirm our bullishness and continue upwards. Now for the trade I was talking about when it comes to market structure, I think everybody gets confused as to how do you know market structure? How do you know when there's a break of market structure? And what I've been back testing, let me use Oanda since I've marked up effects here. So basically, break of market structure, I would define is when a sponsored candle is taken out. That's the way I would define it. When a previously sponsored candle gets broken, then there's a break in market structure. And I saw 2 live trades happen like this, last week. That's this GBP AUD and then Euro AUD. They're pairs I trade a lot. So now on this GA trade, I think it was somewhere here, right? Where is that? It was this zone, right? A sponsored candle is something that's taking our liquidity and broken structure. based on our explanation. I think my internet is acting up. Okay, let me see. Okay, it was here on the 5-minute time frame. If you follow structure, if you were following structure here, you'd have seen, oh, there was a break here. There was a re-entry on this candle. And there was a further break here. And this was the candle that caused that break, right? And this also took our liquidity here and broke structure here. So I was looking at this zone. And to be honest, I was looking at continuing taking a buy from this level. I want to take a buy from here. I don't know if you guys know breakout block. You can see a breakout block here as well, right? So I was thinking, oh, I'll take a buy to continue upwards, right? And then right before my eyes, this got taken, and it was a clean break of structure. So when supply is strong enough to take out a demand zone, that's where you confirm a break of structure. So immediately, this became my POI for sales, continuation sales. So when demand is taken out by supply, you look for the closest supply zone and take a trade from there. And you see, immediately that break of structure happened. Price came back to retest the supply zone, and that was it. It fell for, even the way price left the zone, see the candles, give like 51 pips, and then she's trying to reverse. But currently, you cannot confirm a break of structure to the upside for me until this is taken out. So that's how, if you follow one pair, you can know when there's a break of structure. If price comes up and breaks this level, then I'll be looking for buys at any retracement to buy. So just following price
That's
action.
even a range structure.
Yes, exactly. So following, let me remove all the drawings. So that's it. And range structure basically, guys, is like they explained, like Extra Man explained, just after a break and price doesn't come up immediately and starts following structure, respecting structure on its own. So we know that this whole area is unmitigated. So even though we're following this structure, that's why when there's a break above here, even if price break structure to the upside, you can take buys, but your take profit should always be before it gets to a level like this, because you know that this is the last unmitigated sponsored candle. But if we go ahead and break that level, then you can look for a POI below to take a buy from. Now, this takes me to Euro AUD, basically. Euro AUD. Something similar happened, just like I explained. It was also on the 5-minute time frame. So for those that struggle with confirmation entries, 5 minutes is clearer when it comes to structure, because 1 minute can really be messy unless you are a pro like Extra Man, right? So this was on 5 minutes as well, similar to GA. I was looking at this. This candle had taken out this high liquidity and then went ahead to break structure. So you just need to be very, I don't know, maybe your eyes need to be really sharp. So this is our sponsor candle here, this candle, right? Does everyone agree with that? This is the sponsor candle.
You're right.
Yes. And this also took out this liquidity and also broke structure. So our new sponsor candle is here around this zone, basically. So I was expecting price to come back here so that I can take continuation sales. Watch, a sponsor candle is always a sponsor candle. We got a reaction from that level, right? But what happened? Price broke the level. So when you get a break of a sponsor candle, that's a break of market structure. So immediately you should be looking for a POI that you can buy from. And then you have this. So just basically you can do the reverse. So if price takes you out, stop loss, you can enter the reverse when you know that we have truly changed direction. So on the 1 hour, this might be clean out the 15 minutes, but once there's a break, so drawing out your mitigations on your chart helps you know when price takes that level, you know that we have broken structure. So price is selling, it doesn't want to respect your sponsored candles to continue selling now. There's buying power. So you come back and you take your buys and look how clean it was. It gave re-entry after that break. This is the re-entry. You have the break of structure. Price also gave another entry here and has still
Even
taken
after the
high.
price, it came for the
Yes,
internal
yes,
liquidity.
for mitigation. It's normal. So structure, you just need to check. And now we're trending up. Don't be surprised if market opens this week and gives another entry, maybe somewhere here. So we know we're reaching for liquidity upside. So price doesn't want to go down anymore, to be honest. So you can take buys now, and then it might be reaching for this area, this high as a target liquidity, external liquidity. But don't forget your higher time frames in all of this analysis. Don't forget your higher time frame. And it repeats itself. Everything is price is fractal. So we know on this pair, on the 4 hour, I think 4 hour is always cleaner for me, or 8 hour. Now this pair, the last mitigation was here on the higher time frame, right? And then we broke higher time frame structure. This was a daily BOS. And since the break, this zone, there's no mitigation that has happened here, right? And we had our range structure. There was a range structure here, just continuations without a mitigation. And it's cleaner on the 4 hour. Let me see if I can get that. Yeah, so you see, we mitigated this candle. Price broke down to the lows and continued this structure here. Inside this range structure, you see we kept respecting the mitigations, respecting this, what extra man will call a range structure. So we kept getting the breaks and the retest, the breaks and the retest. Just market structure continued to the downside basically. And this was the last mitigated candle, right? This broke, price came back, mitigated. And all of a sudden, we pushed up and we've broken structure. Once that mitigated zone is broken, that's a break of structure. And immediately, you can see that once a break of structure happens, price will never take that low again. You know that they want to go up. So our target now is this high. This high should get taken. Yeah, let me put the line. This high should get taken because that broke structure, broke this zone. This is the last supply candle. This was actually our last sponsored candle to the downside. Now, that it broke structure does not mean we are forever bullish. We know that this zone here above is still unmitigated on the higher time frame. On the daily, is cleaner. We've broken structure, but it is to retrace to this zone. You see, this is the origin candle that was the last mitigated candle here. Origin of the whole move downside. So this is the range, which is now liquidity. And now we broke above this candle. So you see, we're already pushing up. We're respecting. Look at how those zones I drew on the 5 minutes. It now makes sense to you on the daily because we made a daily sponsored candle. And our next liquidity, we're targeting this high. I would actually be looking for buys when the market opens. And now, because you already have your TP zones, you know where you can set your take profits and not be worried. Even if market dances up and down, we are going to take. You have 100 pip move. And ultimately, you have the move to this sponsored candle on the higher time frame. This is the daily sponsored candle. And because it's a daily zone, you can see the clean structure. We're trending downwards here. So your next take profit can be before this sponsored candle here. Now, because we don't know what price will do, you wait until, if we then break this, if we break above this place, then we can say, okay, we are bullish, right? But currently, this is the roadblock we have. because that's the last unmitigated zone that broke market structure. So for structure, that's it for me. Just trying to follow the mitigation and switching through time frames to know when you get a break of a sponsored candle. So it starts even from the 5 minutes. Look at how that EA 5-minute break we spotted was enough to translate to a daily order block zone. So that's it on structure for me. And I think I showed you guys some other stuff on structure on the group on the higher time frame. It's just similar to what I've said here. When a former demand zone, so you can look on your higher time frames and try to spot a demand zone that has been taken out. So when a demand zone is taken out, this is a previous demand zone, because this demand zone made our higher high, and the moment price broke below it, you look for a zone you can sell off from. Now 4 hour, like I said, will always show you better structure. So daily, you already have this zone, and MIP, I'll probably have this as well, the higher zone on the daily. But then 4 hour, you look for the most recent supply that caused that break and follow the mitigations, most importantly. So this is on the 4 hour, but you see that this candle mitigated this one. And then you know that this is the last unmitigated candle, this one here. So just following your mitigations help actually. And now we came into the mitigation zone and we broke structure again. This is another break of structure. This here. This one. So we broke structure and we're already forming a range structure here because we haven't this range structure. See how it's tight here? We didn't come back to this zone, but it's cleaner on the 2 hour. You see that price will always respect. Structure gets respected. Just switch through time frames to monitor. When I get confused, I go back to my higher time frame. And price is following the mitigation. This is a break, it returned. This is another sponsored candle. It returned and we got another break. So we know that this candle here is unmitigated. Yeah, so that's it. This is cleaner on the 15 minutes. You have this zone on the 15 minutes here. This is the candle for me. And it makes sense to me because that's that same 5-minute candle we looked at. Exactly. This is the last mitigated zone. So if you follow price, especially if you're sticking to a few pairs, like recently I've been sticking to GBP AUD, Euro AUD, GBP NZD, Euro NZD. So that zone on the 1 hour, you can then fine tune it. So if we get a break above this level, then we have a break of structure for a possible retracement or a continuation. So that's just market structure. That's why I follow structure personally. But I know that we'll most likely continue to sell from this zone. We shouldn't break it yet because this equal lows, we have liquidity. So this is also a valid setup for when market opens a short position. I think I even put this in the group. I had taken a buy, I think on Euro AUD. I posted it on the group, but then I said anybody who is taking the buy should beware of this level for sales. I think that was Euro AUD. And that happened. So this is a valid sell setup for when market opens. However, if we break above this level, then we look for the opposing point of interest to take our buys back to that level. So that's it for me from this end so far on market structure. Just following the mitigation so you can identify when you have a true break of structure. Okay, let me show one last pair. That's a Euro GBP. While everybody was trying to sell Euro GBP downwards, I knew that price was going to go upwards, and this is why. Following this is daily time frame. We've been trending down for a long time. In short, for the longest, there's a PY here. I've had this to continue sales from. Yeah, I've had that zone for sales because we broke and then we got into range structure. This is range structure here, right? This is range. after a break and you don't get an immediate mitigation, then price follows the range structure, right? So this is the daily time frame. And what do we see? We had this I think 4 hour, like I said, is always cleaner though. But the daily can show this as well. The message I'm trying to pass across is just knowing when there's a break. We had this lower high, we had a lower low here, right? We had another lower high here and a lower low again here, right? The reason why this is a lower high, guys, I hope you all will agree with me. We took our liquidity here. You see, price reached out, took out the liquidity here, and went ahead to break structure. So this is a valid sponsored candle. Do we agree? On the daily, this is a valid daily sponsored candle because it took our liquidity and broke structure. Yes. So the moment we got a break above a daily sponsored candle, that showed me that we are trending upwards now because we've broken daily structure. Demand has taken out a daily supply. So that's a true break of structure. So if it's confusing for you on the lower time frame, just go to your higher time frames and look for any demand that's taking out supply or a supply that's taking out a daily demand and wait for price to come to that level. Let your patience work for you. So ultimately, we know we have this zone above that is unmitigated. So we know that we may now have started our retracement to that level to then maybe continue selling unless price breaks above this level. That's the way I see it. Now here, the only thing that would, on the daily time frame, I will have this level as my POI, right? 1. And then here, this is what some people call a hidden base or a king OB. When you see like 2 weeks in touching each other on the higher time frame. Now, if you go to the 12-hour, this is why I switch between time frames. This is confirming that there's a candle here. Then on the 8-hour, that's the cleanest candle ever. You see that? We have 10 more minutes. So price just came to this 8-hour demand, right? And that's because this is the last place demand was introduced before that break of structure here. So this is the first place you expect a reaction from. However, if we break here, then you know price may be reaching for this. But when you see this kind of momentum, you know price may not give that deep, very deep retracement anymore. And look at it. We're already taking that high. It's just I didn't really follow up on EG, Euro GBP. That's why. But though this is a daily break of structure, so you know we're bullish in the meantime. So just watch out for this pair. But it has bought so much. I'm expecting some form of pullback at some point. But this was a clean of the daily. That's a clean 128 pips. This is a trade you just take and leave it till it hits your TP because you're sure of the direction based on the daily time frame. So that's it. That's really it, guys. For me, for structure, the true break of structure is seeing where a sponsor candle is taken out. Now, what we need to get better at is spotting sponsored candles. What for those candles that have taken out liquidity and broken structure? And what that candle can do for you, a true sponsored candle will give you two things. It will either give you a trade to continue the setup or still give you a trade to confirm when there is an opposing setup, because when a break above a sponsored candle just tells you that it's time for a retracement, or it will either give you a continuation. So those are the two things the sponsor candle can do for you. So we can backtest this, guys. We can backtest this, and that's it for me. Okay. Yeah.
You have time. Can you look at gold? I think when I tried to take a sell last week, you and an extra man said something about a candle that hasn't been and I said that hasn't been broken,
okay,
or something like that.
Gold. Yes, I think.
Can you go into that detail of that setup last week? Because I mean, you were right because it failed. So
okay, I'll do that. I want to just select a broker I haven't drawn stuff on. Okay. Now on gold, guys, if we get cut off, just click on the link again. I will restart the Zoom because we have 7 minutes more. Okay, so on gold, we based on the daily time frame, we're trending downwards. This was a break of structure here. Now, these candles are demand candles on the daily. The moment we broke below it, that's a break of structure. Price came back up. So following the mitigation, daily candle mitigated here. Daily candle mitigated here. Daily candle mitigated here. Understand that when we're in a trend, price will never break the structure unless they are willing to change direction. See, daily candle mitigated. So this helps me following the mitigation. You see, then now we know we have this unmitigated zone. And price broke, and we have a range structure. This is the range structure now when you don't get an immediate mitigation. Right? We agree with all of this I've said. I'll delete this for some minutes now. Now, even going to the range structure, we have this mitigated. We have this mitigated. We have this unmitigated. So yes, everybody's saying gold is bullish, but until we break above this level, you don't have a break of structure. Let's understand that. So everything happening here can be a retracement to continue downwards. Now, if range structure breaks to the upside, we know that we're ready to go up for the higher retracement, for the higher zone. That's this higher supply zone. But in market structure, price should respect the range structure to continue market structure. But if we break above the range structure, then you'll be targeting this higher zone above. Do we understand that? So that's it for the daily. On 4 hour, it will be clear as well. Yeah, the mitigations will be clear here as well. Clear. Now that trade you were talking about, I think it was on the 5-minute time frame. Yeah, let me look for it. And the same thing happens in all time frames, even if we go to the 15-minute time frame. Yeah, price broke below the zone. We have a 15-minute break of structure here, right? And immediately the break of structure happens, there's no mitigation above that break of structure. Price continues the range structure mitigation. You have 1 mitigated, you have 2 mitigated, right? You actually have this one. When I see a candle like this, a wick, that's a mitigation as well. So it means price came back into that zone on the smaller time frame. I'm sure if I go to 5 minutes, it will be clearer. So this is 5 minutes. Yeah. So you see, 5 minutes. This is also a 5-minute sponsor candle here, right? Mitigated. So this 5 minutes remains unmitigated, to be honest. Took our liquidity. We have this one mitigated. So this is range structure. Range structure would keep on mitigating itself. Range structure. Now, I think that setup you're talking about, Frank, it was somewhere around here. It was somewhere around here. This candle was unmitigated because it took out liquidity here. This liquidity mitigated this one and broke structure, right? This one did not mitigate it. However, price here, this is the area you were looking at for your buys, Frankson. It was somewhere here, but it was on the 1 minute time frame. So it was looking like, oh, price had reversed for buys on your 1 minute time frame. Let me look for the level. Yeah, this was it. So you had seen this on your 1 minute and you said, oh, break of structure, and you were trying to get a trade here to buy up. But we were seeing this unmitigated candle here. So we knew that. So this how 1 minute can confuse you. On the 1 minute, you have a break of structure, yes. But then don't forget that because you have an unmitigated zone here, we haven't broken through structure on 5 minutes. So 1 minute gave you that setup, but even if I was taking a buy on the 1 minute when I confirm a break of structure, your take profit should be before the last unmitigated zone. You see, it can give you like 58 pips. That's cool. But just understanding where to take profit. Make sure you're taking profit before this zone, because if you had just left it, you're buying all the way up when there's no true break of structure, what will happen is you'll be in profit and next thing it will turn and hit your stop loss. So you see, and price did that. It came back. That's why I use 5 minutes. 5 minutes is clearer for structure, guys. Like now that we're still learners, I would advise 5 minutes for entries and everything until we get better at structure. Because look at it, 5 minutes, it tapped. Immediately, there was a break of structure here. So it gave a
So
re-entry.
what would you say?
So I would say
What would you say
minutes.
is the bullish break of structure on gold?
Now on the
playing
5
it forward.
minutes, I will show you the break of structure now. So this is that entry. It gave you the re-entry. So we're still following our mitigations. Let's see. We have one more minute, I think. We're following the mitigations. You see, we got a true break of structure here now. And price gave you a re-entry at a POI. So when you follow your mitigations, you will know, especially in 5 minutes, when there's a true break of structure. So you take an entry, but then remember this zone has been unmitigated. So when there's a true break of structure, you also should know your opposing zone, right? So it's fractal on 5 minutes, there's a break, but there's no 15 minutes has not broken. So until we get a higher high, then we confirm true structure. So always know where to take your set your TP, take profit. So take profit should be before this last zone. And you see, we retraced, went back up because there was a break of structure on 5 minutes. We went up, but then this zone got tapped and it continued the sell-off. So it's still confirming that we are bearish. So always learn to follow your mitigation. And then on 5 minutes, we still have